Hey, my friends. Hey, we are live here talking about mortgages. Go figure, right? So we've had some questions come up over this week, and it seems like one of the questions that comes up quite often is co-signing for um, how does a co-signer affect your ability to buy a home? So when you go to get a car or a credit card, if you don't know or if you don't have good credit or maybe don't make as much money, you can have a cosigner make up for that lack of credit. Unfortunately, it doesn't work that way with a mortgage. The reason why is mortgages, instead of looking at each credit individually and saying, "Hey, this person has a better credit score, so I'm gonna kind of ignore the bad credit, and we'll let this person carry the weight on a car payment or if you're buying a car or a credit card." That's the way it works. On a mortgage, it doesn't work that way. Um, there are three different credit bureaus. One is Experian, one is Equifax, and one is TransUnion. And as mortgage lenders will pull all three credit reports, and they'll look at those credit reports, and they'll throw out the high score and they throw out the low score, and they use the middle score for qualifying your mortgage. Now, when you have sorry, live, I have calls coming in, so sorry about that. So when you're qualifying a mortgage, sorry, you can't make this up when it's live, right? You can't like edit. So I'm just saying ignore the calls and we'll just keep talking. So when you have somebody that has maybe not a great credit score, or maybe you have, let's go the other way. You have a really good credit score, and you want somebody to help you qualify for a mortgage, and they say, "Hey, I need a little bit more income so that I can qualify for more of a home." So it stands to reason that you just have somebody to co-sign for you, but maybe their credit score isn't as good. The problem with that is, if yes, you can use their income to help you qualify for more of a home, but the problem is let's say you have a 750 credit score and they have a 620 credit score. So, and when I say 620 and a 750, remember you have three credit bureaus and we're using that middle score. So now instead of using that 750 credit score, we're going to use that 620 credit score to qualify the entire loan. So even though you have really good credit, the cosigner is what is going to is what we're going to use for that qualification, because we take the lowest of the middle credit score. So as unfair as that sounds, that's the way the mortgage industry works. So it can help you in one respect, in that if somebody has some income, you can use that income to help qualify for more, but it can hurt you if somebody has a lower credit score. And the difference between a 620 credit score and a 750 credit score is huge in interest rate and huge in qualifying. So if you're getting a conventional loan, conventional loans are really sensitive to credit scores. So the interest rate that you get at a 750 score is going to be much better than it is at a 620 score. So if we're doing something like an FHA loan, and I'm not going to get into all the different reasons why we would use an FHA or a USDA or some other type of loan over conventional, but just know that an FHA loan is not nearly as sensitive as a conventional loan, which is sometimes why we use an FHA loan over a conventional loan. So cosigners can help, but they can actually hurt you as well. So that's just something to think about when you're getting a cosigner. Call me or my team for more information, and we can get you some more information on credit cosigning for credit score. So I'm going to invite Sydney, my marketing manager, and see she's kind of monitoring the questions as they come in. So, Sydney, hi, Sydney.
Hi.
So,
So one of the
what
questions
questions do you have?
so can you add your spouse later? So let's say someone doesn't have a great credit score and they just want to use the one credit score. Can you add them later into that mortgage?
Well, no, because anytime you add somebody to a mortgage, it's an all or nothing thing. So if you're going to add your spouse or another person to your mortgage and you want to use their income, you also have to use their credit. So if their credit's not as good, then that's where it's going to hinder you. But so to answer this another way is, yes, you can add a spouse or somebody else to your mortgage at any time. Well, unless you're like ready to close, then it just delays everything. But just know if you add somebody, there's probably going to be some delays in the mortgage processing. But you can't use somebody's income and not use their credit. So hopefully that answered their question. Did that answer the question, Sydney?
Yes, it did. And
Okay.
we've got one more here. This one's a little bit unrelated to the topic, but how much should you expect for closing costs when getting a mortgage?
That's an interesting question because it really depends on the type of mortgage you're getting. And the reason why I say that is closing costs can, if you have something like a no down payment program, such as a Utah housing or another bond program in another state, the closing costs are oftentimes a little bit more than getting a traditional mortgage, such as a conventional or an FHA. So typically you're going to see something like a processing, maybe an underwriting fee. You're going to have title fees. You're going to have an appraisal. You're going to have a credit report. So you're talking 2,500 ish for, and it could depend on the loan amount too, because the title insurance can depend on the loan amount. The higher your loan amount, the more title insurance is going to cost. So your cost will go up a little bit. Now, what a lot of people don't think about is within those costs is also something called an escrow account. So you're setting up an account for your taxes and your homeowner's insurance, and so that can push it up another couple $1,000. And so your costs are going to be somewhere. And a lot of people use a percentage, a couple of percent. It could be 1.5% up to 3% of your mortgage amount. So that gives you a ballpark figure, but that's also including your escrow account, which is really your money, and which is for another topic. If somebody has questions on escrow account, what that is, it's really setting up money for your taxes and insurance when they become due. So all in, you might be pushing $4,500, $5,000 for closing costs and setting up your escrow account. Hopefully that answers your question. Cindy, do you have any other questions that are coming in?
We have one more here, also on a different topic, but what is the difference between a mortgage lender and a mortgage broker?
So there's, within the industry, you have a mortgage broker, you have a mortgage banker, and you have a bank or a credit union. So a mortgage broker, which I was a mortgage broker, had my own mortgage brokerage for many, many years. So we don't do anything you go out and you shop for the loan. You don't have you're not lending any of your own money. You're not as a mortgage broker, basically as a mortgage broker, you're going out to find the money elsewhere. As a mortgage banker, such as what I am now, you have the ability to go out and find some money, or you have your own in-house programs, or you have, or you can go straight to Fannie Mae, Freddie Mac, and Ginnie Mae, which is where most of your mortgages come from. So we bypass the middleman, which is what mortgage brokers do. They go out to a middleman and get the mortgage money. As a mortgage banker, we bypass that. Same thing as a mortgage bank. but a bank and credit union usually have a very narrow niche. It's like if you don't have really good credit and you don't fit in this box, you don't get a mortgage from them. Where comes a mortgage banker and a mortgage broker has probably more options. So I've been all three. I've been on all three sides of that fence. And I personally, I like where I'm at. I like a mortgage banker because it gives me the option of going straight to a mortgage to where the money is, much like a bank, and it gives me the option of being of going out and finding niche loans like a mortgage broker. So that's the difference. Really, what you need to find is somebody that you like and trust, that you know, like and trust, and go with that person. More because costs are going to be pretty negligible, the difference between them most of the time. And so going with somebody that you know, like, and trust is really important. And so that's what I would suggest you do. So any other questions, Sydney?
Let's see here. I think we've got one more. Is it worth it to refinance right now?
I love these questions but unfortunately the answer on so many of them is it depends. It depends on if you're getting cash out. It depends on what your current situation is. It depends on what your interest rate is now. Depends on if you're just trying to lower your payment, and you're not paying off anything else. Because if you're paying off other things such as a credit card or some credit cards, a car payment or something else, you're just trying to lower your overall payments, it still may be worth it. If you're over, high threes, 4% range, probably ought to really look at it right now. So the best answer to that is call me. Let's look at your situation. We'll run some numbers, compare that with what you have right now, and it'll make it really clear for you. How about that, Sydney? Any other things? Or
I think that's everything. That's all the questions we have for today.
All right, that's awesome. Thanks so much for listening in on our live at 5, and we'll catch you next week. Talk to you guys later.